Boy, did these retail numbers come in better than I think we had expected. And, well, the market has moved. But, Valerie, I think the question is, can it continue?
Well, yes, I think that we're actually looking at a pretty healthy market going forward. I mean, the key really is what's going to happen with consumer spending in the fourth quarter. I think that's really going to determine how we finish out the year. And right now, I think things are looking pretty good. I know that the consumer confidence numbers were actually a bit low, but that's really contradicted by some other data, including the fact that people are quitting their jobs at record numbers. So I think consumers are actually feeling pretty good, and I think we'll close out with a strong year.
Greg, are we inflation? We don't care about inflation anymore? What happened in the past 2 days?
Well, look, I think we care a little bit less. As you know, I was probably an outlier in August saying that we'd hit that 6% CPI mark, and I think we'll hit the 5% PCE mark. But at the end of the day, this is going to abate. I think that it probably peaks somewhere in the back of this quarter, maybe next. Obviously, energy price inflation as we enter the winter heating months in the Northern Hemisphere will drive, obviously, not only energy prices, but byproduct prices, fertilizer, cement, things like that. So I do look for it to continue. I look for wage inflation to continue. When we looked at that last jobs report, we created 5 times as many jobs as workers entering the workforce. And so the wage inflation will continue. I do expect the supply chain issues to abate somewhat. Like Valerie, I agree that we're probably positive into year end. I see no reason why, nothing that would dislodge sentiment at this point, given we've hit that 6% that I was expecting, short of another protracted battle over the debt ceiling in early December.
Hey, Valerie, in terms of just, though, how you'd allocate things, you know, people talked about the great rotation. We've seen the air come out of a number of the big sort of what might be described as pandemic stocks, some of the growthier stuff. Where do you put your money?
Right. Well, right now, I think there's a big benefit to remaining diversified. The sectors I like right now include consumer discretionary, financials, and tech. Financials because they tend to benefit in a rising rate environment, so it's good to have some exposure there. But if you look at consumer discretionary and tech, those are sectors where there's actually a wide dispersion of investment returns, so it's a good opportunity for stock selection. Because as you said, if you try to play different factors in the market or look for broad trends, sometimes those can reverse quite quickly. So I think it's a good time to be leaning into stock picking, especially in sectors where there's, there are winners and losers, and you can really make some strong calls based on your assessment of a company's fundamentals.
Greg, I mean, the animal spirits are still here. I mean, you look at Rivian, you can't even believe what's happening. At least I can. I don't know. Right. Maybe you can. By the way, you saw Elon Musk selling some more Tesla stock. But what does that say about where we are when you see things like that?
Right. Well, that, there are things in the market right now that belie traditional valuation techniques. And, Rivian is one of them where it is. I think it would be around 10 times gross profit if they sold 800,000 vehicles 4 years from now. So it's hard to get my mind around something like that. But where I am looking, because I believe Valerie's right, that now's the time for stock picking, I'm looking for things with pricing power, growth, and margin protection. And so when you look at some of the software names, something like Microsoft or Adobe, they've showed us that they're able to endure this environment, putting up 45%, 46% operating margins, respectively, showing us leverage throughout the year. They have some unique intellectual property. Switching costs are high. So software has always exhibited some durable pricing protection, and even some more interesting ones, because obviously energy and chips are areas that are either able to pass through or undercapacitated. But when you look at parcel delivery, we're undercapacitated there. Even if Amazon doubles over the next 2 years, we'll remain undercapacitated with demand growing by 10% and capacity only growing by 8%. So I think that's interesting. And in financials, while I agree with conglomerates, I'd also look at some of the payment processors where cross-border transactions are going to come back, hovering right now at about 70% of 2019, and obviously benefiting from mix shift from cash to credit.